Hello traders, you are welcome back to the Forex Geek channel. In this particular video, we are going to explore a key trading tool called depth of market and how it works on MT5 and MT4. Okay, so if you've ever wanted to see exactly where buy and sell orders are stacked in the market, then this video is for you. Now, depth of market, or DOM, is a tool that shows all active buy and sell orders for a particular asset at different price levels. Now, unlike a normal chart that only shows price movement, DOM gives you a real-time view of market liquidity. So it allows traders to see where most orders are concentrated, helping to identify potential support and resistance levels. All right. So now you might be wondering, why is depth of market so important? Well, depth of market is important because it provides insight into market sentiment. For example, if a lot of sell orders are clustered at a certain price, that level can act as resistance, right? Conversely, a large number of buy orders may indicate a strong support level. So this information can help traders make more informed decisions about entering or exiting trades. All right. Now on MT5 and also MT4, you see this is the depth of market on MT4. So on MT5 and MT4, you can access the DOM just by right-clicking on a trading instrument, whichever asset that you want to see the depth of market for. You just right-click on it. You go to depth of market. All right. So you can see this is on MT4, right? On MT5, the interface is more advanced, as you can see. Just right-click and go to depth of market. All right, so you can see that the MT5 shows you detailed volume and order sizes. MT4 provides a simpler view, but still allows you to see the buy and sell orders stacked at different prices. Okay. When you open the DOM, you should see two main columns. Now, the buy orders or the bids are orders that traders are willing to buy at a specific price. All right. Then the sell orders, or the ask price, they are orders traders are willing to sell at a particular price. Okay. So you can see this is for sales, right? At all these different prices, you can see this for sell. Sell stop, which is below current price. Sell limit is going to be above current price. Then you can see this is for the buys. So buy stop is going to be above current price. Then buy limit is going to be below current price. Okay, so the larger the number of orders at a particular level, the stronger the support or resistance. Now, by observing how these orders change in real time, you can anticipate potential price reactions. So before we conclude, I'll just give you a few practical tips And the first tip is going to be combining the depth of market with technical indicators to confirm potential entry and exit points. Now, it's not enough to just rely on the depth of market, okay? You need to still do your technical analysis. You need to still, look at your chart, identify important price zones and price points on your chart, areas of support, areas of resistance, and all of that, okay? So you need to do all this analysis. You need to do your technical analysis on your chart. And then the depth of market should just be, an additional tool that you use for making your trade decisions, okay? So you can see this was actually an area of resistance that turned into a support here, right? So combine your DOM with technical indicators to confirm potential entry and exit point. Let's go to the DOM for USD CHF. All right. Now, secondly, you should watch how volume at different price levels changes during high volatility periods. All right. And then finally, use a demo account to practice reading DOM before trading live. Okay, it's important that you understand the concept of depth of market, deeply before using it actively for your trading, okay? Now, in as much as you don't necessarily need the depth of market information to trade successfully, if you are the type that wants to, get as much information as you can about the currency pair that you are trading at a given time, all right, then you can take advantage of the depth of market, but make sure that you understand it properly in order not to complicate your trading strategy, or to complicate your trading basically. All right, so you need to understand how depth of market works before you make use of it, okay? If you do not understand how it works, then you can just let it be, okay? You don't have to use it. All right, now when it comes to executing trades, always pay attention to your risk. That's very important. It doesn't matter the kind of strategy you're using, but always pay attention to your risk. Use good risk to reward ratios and do not trade with an amount you can't afford to lose. So by understanding what is depth of market on MT5 and MT4, you gain a powerful tool to analyze market liquidity and see where price may react. DOM can help you anticipate movements and improve your trading decisions. So if this video helped you understand depth of market on MT5 and MT4, make sure to like the video, subscribe, and click the notification bell for more Forex tutorials and market insights. Stay ahead in your trading journey. See you in the next video.